Good morning, everybody. This is the Live Market Open for Thursday, February 25th. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. I hope everybody's doing well and had some shifts in market movements in recent days. We'll talk about the recent developments, various charts and levels, the next 24 hours, which have quite a busy schedule, and of course, most importantly, your questions. So you're welcome to post them, of course, in the chat box. If you cannot see the chat box, just go to the address that appears on the screen. I already see a few of you in the room. All right, so tlk.io/fxstreet-forex-live-video. Okay, what did we have yesterday? In general, top line, bottom line, if you wish, we had bad US data, interpreted as good news because that keeps the Fed on hold. And that pushed, of course, the US dollar lower because it's bad news for the US dollar, but generally good news for markets. And in addition, we had stronger oil, and because of inventories, and that's, of course, also makes markets happier. We've seen a big correlation between oil prices and stocks, as well as, of course, commodity currencies enjoy higher oil. Safe haven currencies don't do that so much. Another ongoing theme all week is the pound suffering. Yesterday we fell all the way under 139. We'll show the chart soon, but we had some kind of recovery from there. Yen saw high demand when things looked bad, but when things improved yesterday, we saw dollar yen moving higher, so the yen was the only loser, I would say. Well, inventories were okay. They came out slightly better than expected. And of course, in comparison to the API figures, the American Petroleum Institute. So that was the sort of comparison. And, well, overnight we had James Bullard of the St. Louis Fed talk about lower inflation expectations. And this also contributed to a better mood, because if inflation expectations are lower, then, of course, the rate hike is pushed back and back. So, well, but since I prepared all this just, half an hour ago, we're seeing some kind of shift in market sentiment in the past minute. So I was talking about this sort of risk on better market mood yesterday against the dollar, but now we're seeing a slightly risk off, or maybe a stronger dollar. Euro dollar is sliding back down towards 110, currently 110.15. Support is at 109.60. We talked about this line yesterday, and the pair indeed fell to this support line yesterday. Since then, we bounced back up, and okay, so this is what we had yesterday. Resistance remains at 110.70. The round number of 110 does not really work as support or resistance, so I would say the range is 109.60 to 110.70. Dollar yen yesterday, when things didn't look so good, fell all the way to the previous line. Also very nice technical behavior at 111. Since then we've gone back up. Now we're sort of erasing part of these gains. The Chinese stock markets are not looking that positive this morning, and that's, of course, weighing on sentiment and pushing the yen a bit higher, but not that significant. The British pound resumes its suffering. So yesterday we fell all the way to, let's add another line here. Talked about 139.64 as very, very temporary support yesterday, but it worked nice also as resistance after the pair fell to even lower ground, 138.79. And now I would say that this line right here works as resistance. Okay, 139.60 more or less. All in all, we're in a much, much lower range, the lowest levels since 2009. At least we have some stabilization, some kind of pause, but this could, of course, resume with the next opinion poll or the next time that the market mood worsens. Okay, dollar CAD, the better oil prices. Look at this, quite a significant move. So we had, when the situation didn't look so good yesterday, we had dollar CAD rising quite high. Now it's falling once again with the rising oil prices. Support 136.20, 137.87. I would still look at it as resistance, but it's weaker than it used to be. 139.10 is further resistance. Aussie dollar, we had some figures overnight in Australia, which came out better than expected. Capital expenditure, and that helped the Aussie just a bit. Yesterday it fell off the highs, found support here at 71.40. Eventually did recover, and this figure, positive figure, also helps. The range remains 71.40 to 72.20. Okay, and the Kiwi dollar, well entrenched within the range, 6666. Okay, 65.52, 67 is the range. Dollar Swiss just under parity. Just above 99. It found resistance parity earlier this week. It found support at 98.50. Also here, nice technical behavior from a pair that is vulnerable to interventions. And Euro Swiss, well, we fell lower. Maybe the Swiss National Bank wasn't taking care, but now we're seeing it rise once again. So 109.20 is supported 109.10, resistance 109.40, but quite a dangerous pair. Euro pound, here we're seeing the weakness of the pound. We had it rise to higher levels. 79 is the current high. We already touched 79.30. I would say that the next resistance line is just the very round number of 80. The trend remains to the upside with a relatively stable euro. Okay, yesterday we had it fall, but then bounce back, and the bounce of the pound is much, much weaker. The pound was really the sick man of Europe, if you wish, or the losing currency yesterday. As the fallout from the Brexit talk continues, the pound continues to suffer. Opinion polls show a very, very mixed picture, so it remains complicated. Okay, Euro yen, we fell to even lower ground, 122.40. And if we bounce from here, because the yen bounced, but yesterday also the euro fell, so here we are, 123.60, 124.40 perhaps is some kind of resistance. Lots of moves in this cross. We had less moves in the cross in the past because both currencies were sort of this safe haven tandem, and they were moving together, but now we're seeing they're moving more on their own. The yen is becoming a much stronger safe haven currency, euro less so. Yesterday we had also Jens Weidmann, the head of the Bundesbank, once again supporting action from the ECB, once again showing his dovish side, which he usually doesn't show. That implies that raises the chances for a move in from the ECB on March 10th. Speculation is mounting. Okay, and pound yen, the dragon, the Gepi. Also yesterday, we've seen it fall to even lower lows, under 155. Some kind of stability right here. It's hard to draw the lines here. Basically, it's free fall. With 3,000 pips, if you wish, from levels we've seen not that long ago, above 180. Anyway, the most recent line here of support is 154.66. Now we're bouncing back up. Lots of pips to be made and to be lost in this pair. Further resistance at 160, then 163.80. Where's the bottom? I'm not sure we've reached the bottom yet, especially due to the weakness of the pound. And oil, usually I talk about oil when I talk about the Canadian dollar. Yesterday it had this bounce. You see it fell all the way to 30.50, but then when oil inventories came out better than expected, we had it bounce back up, finding here resistance at 32.30. Sorry. Look how I think technically WTI crude oil behaves nicely. Now we're seeing it fall once again. Perhaps sentiment is deteriorating once again. Remember that Saudi said they won't cut production. Iranians said it's ridiculous. Everybody's producing too much oil. So even if we had a rise in inventories, which was not huge, that was sort of an opportunity for a correction, but not a major change in the markets. Okay. And let's take another look at. I'm seeing that pound remains, breaks to even lower ground against other currencies, not the dollar. Euro dollar stable just above 110. Okay. Let's see if you have any questions. Good morning, everybody. Jake, Fred, Fabian, Reg. Your questions, of course, are always welcome. Let's see what else I prepared for you. Yeah. So bad US data, we'll mention that soon. Further pound suffering. Yeah, we talked about all this. So in terms of data, what did we have yesterday? First of all, the market services PMI. I told you it's second tier, third tier figure, right? Because ISM is more important in the United States than market. But it was so bad yesterday that it did have an impact, okay? Because it fell below 50 points. 50 points is the limit between contraction and expansion, and was a big disappointment. That was supposed to remain basically stable just above 53 points, and it fell under 50. So this is negative. It shows a chance of recession in the largest sector in the United States, the services sector, okay? 15 minutes later, we had US new home sales. This is already, I would say, first year figure, because every sale of a new home triggers a lot of economic activity. We had a big fall of 9.2% to 494,000. Expectations stood on 544. Big disappointment. These are, of course, annualized figures. It doesn't matter. We had a winning streak of US figures, and now it came to a full halt. We have more important figures today and tomorrow. Let's see if this is only sort of a correction in US figures. Now we'll see better ones, continuing the winning streak. I mean, the general positive trend, or that those better figures were a correction in the wider trend. Okay. Crude oil inventories, they rose, but less than expected. I mentioned that. And capital expenditure from Australia rose 0.8. Better than expected. It was predicted to fall, so that's, of course, good news. But expectations for the future were a bit mixed, so it wasn't that positive. Okay. Today we have quite a busy agenda. First of all, at 9 GMT, right after the show, we have monetary data from the Eurozone. Let's look at the FX rate calendar here on Forex Crunch. Today is, just let me refresh this. Okay. So we can have updated data. Here we can see, that's earlier this week. So this morning, well, so far, not many surprises. We had, well, a minor consumer confidence figure in Germany coming out slightly better than expected. But remember, business confidence released earlier this week from IFO was worse than expected. Inflation figures, the final ones, were confirmed. No surprises there. Spanish GDP, no surprises. Also, these are final figures. That's why I didn't mention them. More important figures come out at 9 GMT 10 here at the Old Continent. Private loans, they're expected to rise at a faster pace from 1.4 to 1.5 annually. And the money supply, M3 money supply in circulation, stood on 4.7. Let's see how it moves today. The ECB is watching these figures because with the ECB is trying to push money into markets with lower rates, negative deposit rate, printing money to encourage more lending. So more lending means more economic activity and higher chances of inflation. Okay, let's see if something really happens here. Here we have the M3 money supply every year. It's expected to remain unchanged at 4.7, which is a good pace of money growth. Private loans were negative about a year ago. They were actually falling, the net loans, and now they're on the rise. So it's good news. But in recent months, we've seen these figures get stuck just a bit, just like inflation expectations, just like other figures in Europe. The sort of strengthening has weakened, if you wish. Okay, at 9:30 GMT, we have the second release of UK GDP. Usually surprises aren't big here, and as you can see, expectations stand on no change, 0.5% exactly, quarter over quarter, exactly like in the first release. Also year over year, 1.9% is expected to remain unchanged in the second release. More figures to watch here. Perhaps we'll have no change in the headline figures, but we might have change in the components. So an important component to watch is total business investment, expected to stand at 0.9. Yeah, and the index of services, perhaps already a minor one. Anyway, no big changes are expected. So if we have even a small change in the headline number from 0.5 to 0.6 or 0.4, it could have a big impact on the pound. If we have a change in the year-over-year figure to, let's say, 2% or 1.8, it could also have an impact. And then, of course, the minor ones will have their say as well. Remember, we're in a week where Boris Johnson, David Cameron are the stars, opinion polls are the stars for the June 23rd referendum to stay, or should I stay or should I go for the UK and the EU, Brexit or no Brexit. So these events, these political events, have more of an impact than economic developments, but it's still important to watch. Okay, so your question, could you tell shortly what does Brexit mean for market? Sure. The answer is quite simple and quite clear. Markets do not want to see the UK leave the European Union. Why? Because, well, if you look at the map, UK is of course an island, series of islands, but it's closest to the old continent, to the Eurozone, and also in terms of trade, it's the biggest trade partner. Now, so businesses, markets want the UK to stay in the European Union because they want better trade deals. In any case, the UK will have to continue dealing with the EU, so it's better to be inside and to have influence than to be outside. I think, as Churchill said, it's better to be inside the tent and pee to the outside than pee to the inside, or something like that. Sorry if you don't like these kind of expressions, but I think we'll have Churchill quoted quite a few times. Anyway, what happened on Friday? We had a deal after 2 days of negotiations. David Cameron came back to London with a deal for keeping the UK in the EU and declared also the referendum date, June 23rd. And then he faced surprising opposition from a very popular politician, Boris Johnson, Mayor of London. So this sort of made threw everything into chaos regarding markets, and every opinion poll will have an impact. So markets want the UK to stay in. I don't know what's really better for the UK and for the EU. Remember, if we have this kind of divorce, this Brexit, it could also have a negative impact for the EU. Anyway, so I hope this answers the question. In general, it's not what markets want. Okay. Here we go back to the chart. Anyway, let's see if you have more questions or not. Good morning, everybody. Let's continue with more events that we have today. You can all see so that's a big event today. Then coming back to the Eurozone, we have the final CPI figures from the Eurozone at 10 GMT, 11 here in the old continent. We have final consumer price index, final inflation figures for January, okay? Now we're expecting headline figure, that means including oil prices, 0.4 to be confirmed, and core inflation at 1% to be confirmed year over year. But here, contrary to other figures coming from the Eurozone, we occasionally have revisions. Occasionally we see a change between the initial figure and the final figure. And this is, of course, important for the ECB. Now, it's not the only thing that awaits the ECB, because we'll also towards the ECB meeting, we'll have the preliminary figures for February. I mean, data that is more fresh, okay? But also the final figures for January matter, and we'll get that today. Okay, so any change, any deviation from the initial numbers, from the preliminary read, will have an impact on the euro. Lower inflation, means higher chances of ECB action and a lower euro. So lower is worse for the euro and higher is better. Okay, let's continue. Also in the US session, we have quite a lot of action. We have a speech from Dennis Lockhart of the Atlanta Fed at 1:15 GMT. And then we have important data figures. We have durable goods orders. Here we have headline figures expected to rise 2.5% in January after a big fall of 5%. Remember, as in many cases in the US, the headline figure is not as important as the core figure. Problem here, you sometimes have more than one core figure, but let's focus on the most important one, and the ex-transportation one. Last time we had a big fall of 1.2%. This time we're expecting a rise of 0.2. Why is this important, the core figure? Because in many cases we have orders of aircraft having a big impact. Sometimes it's a negative impact, sometimes a positive one. And also, if you exclude aircraft and focus on things that are durable, that means you focus on also things that are investments. And that's, of course, very important for the Fed, which has a longer term outlook, doesn't look only at the immediate consumption, but also, at the longer term. All right. So this is a very important release at 1:30 GMT. But at the same time, we also should keep an eye on the initial jobless claims. In the past 2 weeks, it was really, really positive. It came out at the 260,000 handle, 269, and then 262, breaking the sort of losing streak. Sorry, just a second. Breaking the losing streak of jobless claims, which were on the upside, on the move above 280. So now they're falling back down, 260. So that's let's see if this positive trend continues with jobless claims. We have it, of course, in the mix with durables goods orders. I think the core durable goods orders is the most important figure, and then jobless claims. Okay, we also have from the US the housing price index. That's an official figure for December. It's a bit old, but worth mentioning. And yeah, and we'll have John Williams of the San Francisco Fed speaking at 5 p.m. GMT. Okay. For those of you trading Kiwi, we also have trade balance today. Expectations are for another deficit, month over month, deficit of 245,000 after a very small deficit of 53 million. Million. These are all millions, not thousands. So worth mentioning if you're trading the Kiwi at night. And later at night at 11 GMT, we have inflation figures from Japan. This could influence how the Bank of Japan acts. It has its next meeting in mid-March, just after the ECB. So, as usual with Japan, the national figures are for January and the Tokyo figures are for February. So the figures from the capital have more of an impact because they're more up to date. Yeah, and here we also have headline inflation, core inflation, core inflation. So it could be a bit confusing. And yeah, we'll talk about that, of course, tomorrow morning. Okay. Let's see if we have more questions. Yeah, comments here. If the UK stays GBP, the pound will rally to the upside as hard as it fell. I think so, because currently there's a lot of uncertainty that really hurts the pound. And if you look outside all this Brexit talk, the economic situation in the UK is not too shabby. Right, the Bank of England is not expected to raise rates anytime soon. But it's of course not alone in the world. The ECB is going to go deeper with negative rates, and perhaps QE. The Bank of Japan just set negative rates. The Fed is pausing. So, all in all, the economic situation in the UK doesn't look too shabby, and the pound is suffering mostly because, or only because of the Brexit talks. So I believe we'll have on June 23rd or June 24th, after the referendum, assuming the vote is to stay in, and that's still the main assumption, like in Scotland. So I think we'll have a very hard rally. If we have opinion polls showing a good chance for staying in before, a big percentage, 10% or more gap for remaining in the EU, then we'll have the pound rallying before the referendum, of course. Okay. Anyway, it's never a one-way street from now until June, but Brexit talk certainly has a negative impact, and staying in has a positive one. Okay, more questions I see here. Do you think that CAD USD will continue going down? Well, just to avoid confusion, when I talk about the Canadian dollar, I talk about dollar CAD. So we had it fall down quite a bit. We don't have any figures from Canada today. So what's important here is the figures from oil prices. Currently 31.60 on crude WTI crude oil. It all depends on oil prices. I believe the trend could be a bit more negative after yesterday's positive move. And if we'll have a negative trend in oil prices, it'll be negative for the Canadian dollar, and it could be positive for dollar CAD. But of course, if we have some kind of headlines talking once again about some kind of a production cut, then it'll be positive for the Canadian dollar. So everything for the Canadian dollar depends on oil, at least today. 136.20 to 139.10 is the sort of wide range. Okay. More questions. Comment here. Better the devil you know than the devil you don't. Yeah, that's why I think they'll stay as well. Forget the polls, stupidity, the polls. Okay. Yeah. So I also think eventually Brits will remain with the devil that they know, remain with the devil called the European Union. Question here, what do you think the direction for Euro Yen? Okay, Euro Yen, I think it has more room to the downside, and that has two reasons. I mean, well, we already have seen 122.40, and that could be immediate support. But why do I think it'll go to the downside? Of course, it's my bias, not a trading advice. But let's talk about the euro. We're still expecting action from the ECB. We're seeing growing momentum for that. Figures in the European Union, in the Eurozone, have been negative. Inflation, retail sales, PMIs, things like that. And comments from ECB members, including the most hawkish ones, are talking about action. I don't know exactly what they'll do. Perhaps cut the interest rate, negative deposit rate, from minus 30 basis points to minus 50, and perhaps more QE, more instruments. I don't know, but the bias is negative. Okay, the euro is less of a safe haven. If we look at the yen side, also the Bank of Japan is expected to act, but we've already seen that markets are not afraid of the Bank of Japan, not afraid from their action in terms of monetary policy, from the negative deposit rate, from the QE program, things like that, and are not afraid from the intervention we've seen last week, or was it 2 weeks ago, some kind of spike which looked like a very clear intervention by the Bank of Japan. And they're not, but sort of markets defied it. So I think that if we have a slightly worse market mood today, we will have a stronger Japanese yen, and the euro is less of a safe haven than it used to be, more vulnerable. So my bias is to the downside on dollar yen. Let's put the chart back for you. Okay. Hope that answers the question. Any more questions? So in the meantime, let's take just another look at euro dollar, the world's most popular currency pair. Very, very stable at the moment. And let's talk about events that we had this week and will have later this week. Okay, these are the events for today that I already discussed in detail. What did we have this week? So on Tuesday, we had German IFO business climate. It came out worse than expected. It showed a deteriorating confidence in the Eurozone's largest country, the locomotive of growth, less certainty because of China, because of oil, because of Deutsche Bank, because of Volkswagen, because of all this stuff. Despite current conditions, which are okay, low unemployment rate, and general positive situation in Germany. On Tuesday, we had mixed US figures. We had good existing home sales and weak consumer confidence. Yesterday, it was all negative from the US, especially new home sales, but also the market services PMI. And crude oil inventories, they weren't a big surprise in comparison to what we had expected early in the week, but in comparison to the API figures, they showed a smaller than expected rise in inventories, which was, of course, positive for oil, positive for stocks, positive for commodity currencies. Okay. Today, the main events, well, we have the UK GDP, Eurozone inflation figures, and durables goods orders. We talked about that in detail. And tomorrow we have a strong finish to the week, especially in the US. We have gross domestic product from the United States of America. Let's actually look at the expectations on that. What I want to mention in this context is that we have a live coverage. Dale Pinkert, Mauricio Carrillo, and myself will be covering it from 1:15 GMT tomorrow. I'll mention that, of course, tomorrow. Another thing we always do on Fridays is a preview for next week. So if we look at GDP, what's important is quarter over quarter and the annualized figure. So it's this one. It came out at 0.7 last time, which is equivalent to 0.2 in the UK, because remember, it's annualized. Very weak growth in Q4. And now we're expecting it to be even downgraded to 0.4, marginally any growth. If we'll see it fall to negative territory, that means contraction of 1 quarter, we could begin to hearing talk about an outright recession. Officially, a recession is 2 consecutive quarters of economic of falls in the economy. Okay, I don't think it'll happen anyway. So even if we have a fall of a contraction in the United States in Q4, everybody's expecting a very nice rebound in Q1. Anyway, this is a very important figure for tomorrow, and of course, at the same time, well, not of course, sometimes overlooked by markets, we have the core PCE price index. Very complicated term. Oh, sorry, that's for what we're looking at is this one. The core PCE price index for January, not for the fourth quarter. Why am I talking about this boring figure? Because the Fed likes it. The Fed watches it. This is the core inflation figure for the Fed, and it's expected to deteriorate from 1.4 to 1.2% annualized. Remember, the other inflation figures, the normal one, core CPI actually went up, surprisingly higher than expected on Friday, 2.2% instead of 2.1. So anyway, it's going to be an interesting close to the week tomorrow with all the GDP-related figures and this figure as well. It's going to be a strong close to the week. Okay. Let's see if we have more comments, questions. Yeah, and thank you, Adinda. putting the link for the event tomorrow. Did you get promoted? Looks like you're in the CEO office now. No, I have working from my home office, and we have guests here at the regular office. So I'm in another room. It's not the CEO office. It's just well, I anyway. Well, I can say it's a promotion. Yeah, I have a nice map behind me. Anyway, any more questions about markets, about movements? Let's take another look at the charts. Some kind of a fall in euro dollar, very, very minimal. I think that we're already beginning to see euro dollar slowing down in terms of its movements because the ECB meeting is getting closer. Closer, it's 2 weeks from now, but the hype is already high. Okay, the lots of buzz around it. Okay, but pound dollar, that's where we have the action. Okay, we're seeing it rise just a bit. I would say 139.60 is resistance, followed by the round number of 140. We're still at the lowest levels seen since March 2009. Okay. Oil is bouncing a bit, so perhaps a slightly better mood this morning, but no significant action. Yeah, dollar yen is quite stable. What are the strongest currencies based on fundamentals and why? Well, many currencies to cover, but I think that one of the strongest and overlooked ones is the New Zealand dollar. The situation there is A-OK. RBNZ is not very keen to act, even though the Prime Minister wants them to act. So it's very stable. It does fall in the range when we have bad news, but it isn't devastating. Regarding the weaker pound, I already said it out, spelled it out. It's the pound is the weakest currency out there because of the Brexit talk, and I don't think it'll change anytime soon. So these are sort of the strongest and the weakest ones. And I see another question. Jax, the regular question, pairs to watch today. Well, first and foremost, just after the show, I would say the pound, because of the GDP figure. Let's see if it has an impact or if the Brexit talk continues to have its influence. And later we have, of course, key US figures later today. So it's the US dollar, and I would say that the euro dollar, also because of inflation figures and also because of also the US figures, I think will have an interesting move on euro dollar as well. Well, I hope for that. Comment here, IFO and GFK to me shows how naive German consumers are. German media is like Sesame Street. Yeah. Yeah, so well, IFO actually came out worse than expected and GFK better than expected, but IFO is business survey and GFK is a consumer survey. Yeah, German media. Is the pound tired of running? No, I think it's still. It's not dead. It's resting at the moment, and I think we'll have significant moves from the pound around the release of GDP and also going along. I don't know when the next opinion polls are expected to be published, but once they're out, I think we'll have lots of action. I think the pound remains vulnerable, but we could also have violent corrections in the current context. Another comment here. Draghi and his wife are staying in the other room and trading. Yeah, yeah, exactly. Have a direct link to Mario Draghi. Hi, Mario. Anyway, yeah, I think he cannot trade. At least not euro dollar. So, yeah, okay. So I think it's time for the wrap up for today. This is the wrap up for the live market open for Thursday, February 25th. We had generally yesterday bad US data, fall in new home sales, fall to contraction territory in the services PMI, worse data, implications of keeping the Fed on hold for longer, and together with stronger oil, a smaller rise than expected in oil inventories, we had happier markets. Happier markets, higher commodity currencies, and less demand for the yen after we've seen the opposite trend before yesterday's US session. The pound continues suffering. It fell under 139, currently finding some stability, resistance 139.60. I'll show the chart soon. The yen saw high demand, but that disappeared. And Bullard was relatively not so bullish, talking about lower inflation expectations. Okay. Yeah, Australian capital expenditure came out better than expected, but there are doubts. Sorry about the future. So let's look at the chart. Euro dollar managed to recover yesterday. It fell all the way to support. Very nice technical behavior from euro dollar. This doesn't always happen. This isn't the best currency pair in terms of technical behavior, but it fell all the way to 109.60 and bounced back up. 110.70 remains resistance. Regarding the round 110 level, I don't think it's that important anymore. It's been crisscrossed from all sides. Dollar yen fell very nicely to support at 111. If we zoom out, you can see how well it worked. And yeah, so exactly the same line here. Okay, a resistance 113.20. Anyway, the yen remains the safe haven currency of choice. Pound dollar. Yeah, the trend is clear. This is the Sunday gap we've seen not that long ago, on last Sunday, of course. And since then, it's been all the way down. Currently, in the past hour or so, we're seeing it recover. 139.60, 140, 140.50, 141.25 are resistance lines. The lows seen yesterday at 138.80, I would say, is support. Dollar CAD clearly moving with oil prices, as things didn't look so good yesterday, with Iranians and Saudis saying they're not doing anything yesterday and beforehand. Canadian dollar suffered, dollar CAD went up, but when oil inventories came out lower than expected, less oil going around, higher oil prices, higher CAD, we had this big fall in dollar CAD. Support 136.20, resistance 139.10, high resistance. Aussie dollar, we already climbed above resistance at 72.20, but we're back to the previous range, 71.40 to 72.20. Capital expenditure did help just a bit, not too much, and the Kiwi dollar remains at its regular range, a bit higher within this range. Better market mood, 66.60, support 65.50, and resistance at 67. Today we have a busy day in terms of economic events. Monetary data from the Eurozone at 9 GMT. The ECB watches this. At 9:30 UK GDP expected to remain unchanged quarter over quarter, 0.5%. Any change could have a big impact on the pound, even though the pound is looking to the next opinion polls regarding the EU referendum. For the euro, we have the final CPI from the Eurozone. No changes expected, but also here, like with the pound, like with the GDP release, every small change could matter. Watch not only the headline figure, but also the core one. Speaking about core, we have the US durables goods orders at 1:30 GMT together with jobless claims. Watch for the core durable goods orders. Jobless claims have been very good in the past 2 weeks. Let's see if this continues. For those of you trading at night, we have the New Zealand trade balance, which is expected to show deficit, and Japanese inflation data, which could be all over the place. The Bank of Japan doesn't care only about inflation, but also about the yen. Okay, so that's the wrap up for today. Before we leave, let's take another look at euro dollar. No change over there. And let's take a look at, see if you have any more questions. You're all welcome. Thank you very much. And let's demand for yen or Bank of Japan trying like hell to turn it. They are trying to turn it, but they've been unlucky in markets called their bluff. Okay, so yeah, thank you Adinda as well, doing a great job, and thank you Mauricio for the channel and everybody. Thank you very much, everybody. So wish everybody a safe and successful trading day. My voice today is not at its best. I'm sorry, I have a small cold, but I'll survive, and we'll be here also tomorrow. Tomorrow we have US GDP live coverage, as aforementioned, and we'll do a preview for next week's events. Next week it's already a new month begins, so a new month beginning, so it'll be quite interesting. Okay, so yeah, that's it for today. Thank you very much. See you all tomorrow, and have a safe and successful trading day as always. So that's it. Thank you, and bye bye.